Jerome spoke and the market moved. Let's check out the charts and see what's going on. I am Dr. Stock, Doctor of Education. And do you know where mixed metals go for legal advice? They see a lawyer. All right, during that opening, you probably couldn't see it on camera, but I got my dad joke shirt. It's where the magic happens. So if you're a dad too, keep up the good work with the dad jokes. It is one of our obligations that we have out there. Moving on to the market itself and talking about Jerome Powell, what he came out to say. People said surprisingly dovish for him. Honestly, I think that we're in a situation right now where raising rates would be very unconscionable. I think it'd be too much stress on the banks when people were asking about, could there be further rate hikes in the future? I think that I don't think that the Fed actually has that ability to do so, and increasing the rates that we have on U.S. Treasuries, for example, that might come from an increased federal funds rate, might be additional stress on the banking sector. And then also I think some of the dovishness came from trying to signal that things were good, because if we signal that things are bad, then people believe further that things are bad, and then things get bad because we believe they're bad, so then we talk about them as being bad. So I think that is a lot of contributing reasons why we heard what we did from Jerome Powell. Also, I don't know if you noticed or not, he got very offensive when somebody, he got very defensive when somebody asked him about if the election has any bearing on what they plan to do. And, honestly, the emotion that came along with it was a bit uncharacteristic, I thought. And I would say, if I had to guess, I got no proof here, but I think it's very reasonable to suspect that that politics does have a much more direct impact on the Federal Reserve's decisions than they'll ever let on. Now, mind you, it'd be nothing that they could ever come out and say. That's not part of the game. That's part of a different game. So with that commentary out of the way for Jerome Powell, let's move over into SPY. We are still down below the 50-day, although receiving no further rate hike information. We have the S&P up a little bit from what we had yesterday, closing down around 500, and then today we're up at about 504. So we're up about 0.7% or something like that in the pre-market hours. And then if we go over to the Qs, you can see that we're also up over here as well, closing in on that full percent mark up. So not so bad. We do have Apple earnings coming out today. I would like to point out, just keep on reminding you that we're not in the clear really on this till we can clear back over this light blue line here, which is the 50-day simple moving average. You can see this red one that comes across through here. This is the 50-day EMA that we're looking at, and we got rejected on that one, so we never even made it up to the simple moving average. So watching what happens there is going to be important for us. Will we put in a higher high? Because if we do, we could be heading back up, especially if we are able to clear the 50-day SMA that we have. If we put in lower lows, which so far we have a higher low off of this little one, not really quite enough to signify as a low yet, but we did turn around from here. So very locally speaking, we do have a low point. And if we get higher lows and higher highs, market could travel up for a little bit longer. And then if we fail to put in a higher high and this thing starts to trade sideways on us, consolidates further, well, then that's something that we also want to pay attention to. So we'll see what the market brings to us. Apple's earnings today in the after hours are going to be very impactful to that. For Bitcoin, just flipped to green. This was red when I was looking through my notes this morning, checking out the different charts and everything. You can see we're getting buying pressure on the daily chart here with the long wicks that we have coming off these candles that we could have found a temporary bottom right around 56, 57,000. And then currently we're up over 58,000 for Bitcoin. On the daily chart here, just hitting that oversold territory and then sort of bouncing up off that a little bit. So we'll see if over smaller time frames we are able to see a little bit more indicator of what's going on right now. And you can see the building momentum. Maybe you can see it. Let's stretch this out here. On the 4-hour chart, we have a slight building momentum on Bitcoin. We have a bit of a rounded bottom here on the charts for that. So we'll see if we are able to clear 60,000. If we get rejected off the 60,000, this thing could head back further south again to an even lower low. If we're able to break and keep that 60,000, then maybe we could experience some more upside out of Bitcoin. We're going to have to watch and see what the momentum has to say over time. The weekly chart, by the way, on Bitcoin is just worth mentioning. The weekly chart, we've come out of the overbought territory, and now we are declining in momentum, so that goes along with the drop that we're seeing. Now, mind you, we're still above 50 though, so still bullish on a weekly basis. So even though we have some short-term pain, we want to watch and see if we get turned around like we did back here, where we broke down below 50, but then ended up recovering and had that rampant run that followed that. So we're going to have to be watching for that. If we get economic weakness, if we get further inflation, if we start to move away from risk, for example, risk assets such as Bitcoin, then this is one that can continue to drop further on us. I am bullish over longer time horizons on Bitcoin, and also I should throw in Ethereum in there as well. But for right now, we're going to have to watch and see if we get saved right around that $56,000 or $57,000 line, and if we're able to clear 60. Over to Enphase, since I've been providing a lot of coverage on that for solar stocks, you can see as of yesterday's close, we didn't really have a lot from Jerome Powell helping us out for solar. And I think that there's two main factors that we can look at when it comes to solar. One would be the high interest rate environment that we find ourselves in, and everything that's tied to that, with what we find through home purchases, and also how wealthy people feel, and their ability to invest in solar, their inclination to invest into solar. And then something else that I think is very much worth considering is the election itself coming up, because if we have the Democrats take the presidency, that could be something that would be good for green energy plays such as solar. And if it's if Trump is somebody who wins the election, who has already talked strongly about moving more towards oil and not necessarily being as friendly to the green technology things. And now, mind you, this is not a political discussion. This is just talking about market implications here, and just talking about Enphase. As far as solar goes, if we were to go Republican and pull back on some of the green plays that would be out there, solar might actually suffer a little bit as if that's not as incentivized. So that's something that we want to consider that could possibly affect it. If there are things that are currently in play for money and funding that's already set to go that way towards solar, well, then we might be all right there as well. It is something that I'm going to be reading further into, and I want to find out what the implications of the election would be on that, depending on which way we would go, Democrat or Republican, with the election, and see its impacts on different plays such as solar and automotive, and then also where our energy plays are involved. So for Enphase for right now, still struggling to get back over. Still haven't broken the 50-day and the 200-day, by the way. That's the yellow and the blue that are up here. So still currently bearish. And when we look at the RSI, we are also bearish on the RSI as well, experiencing a little bit of levity this morning in the markets. There could be a further drop coming for Enphase before this thing is finally done and really turning things back around. So I think that's worth paying attention to. Tesla, pre-market hours, the Carvana earnings, I don't know if you saw those. Up over 30% in the pre-market. I think 36% the last time I looked for Carvana, with a very upbeat forecast, and also a significant beat of profitability, really skyrocketing them. And I think some of what we're experiencing in Tesla is partly market related, and I think some of it is also Carvana related, that we're back up into the 180s, that we're seeing a demand for automotive, and Tesla moving in sympathy with that one as well. And Tesla is up above its 50-day. We want to keep its 50-day for further upside from here. If we fall back down through the 50-day, we could fall pretty hard off of that. We would be watching. The full self-driving news from China is something that is still keeping us afloat for right now. That should be something that really helps to fill out the top and bottom lines for Tesla, hopefully expanding some margin as well in that bottom line. So the 200-day would be that big contender that should we approach that, we want to watch for what happens. Do we get rejected when we stay bearish? Or is it one where we actually are able to break through it, and then we have that golden cross moment for Tesla? We're going to have to watch and see. Still considered in interest rate sensitives, just like Enphase is. So moving over to Nvidia, keep on providing coverage on this. AMD and Supermicro computers did not do anything to assist Nvidia's prices. We're still down below the 50-day, and let me see if I can really get this on screen for you here. This light blue line that we have, you can see that we peaked out at it yesterday just above $850 per share, and then the low price going all the way down to $810, finally settling at about $830. That is up above the 50 EMA, which is good for us. The SMA is really the one that we want to cross, and if the market strength is able to hold out, and we also see further good news coming out for Nvidia, for AI plays. Now, mind you, being infrastructure, I think it stands to benefit differently than what we had from some of the other plays that are out there. SMCI not necessarily being a pure play for Nvidia, and AMD also being a competitor to Nvidia, and certainly not the first place, not the top dog in there. I think that's also worth considering. I still think we have a shot at that $1,000 mark, and we're going to have to watch and see if that happens during the run-up to the earnings. I still think that we're going to have a price appreciation from here, as long as the market holds out reasonably from where it's at right now. If the market is something that pulls back very hard from where it's at, then that would be something that might make me change my mind. It's certainly something that would hinder that ability to hit that $1,000. If the market runs up, Nvidia is probably going to run up with it, making it a lot easier to hit that $1,000 mark for that prediction, running up to their May 22nd earnings. All right, finally, Apple. Apple's sort of having a rough go of things. We got the daily chart here. Bearish as per the moving averages. We're down below the 50 and the 200, and their earnings are coming out. I think their earnings are going to be a bit soft, considering what we have in China, considering what we have from the consumers coming out. I think the results from Starbucks, I know that they're related to the coffee commodities a little bit there, and the increase in price that they have, that was certainly something that would be impactful to them. Apple, we have to watch that demand side of things, and I think as people feel a little bit less wealthy, keeping onto the current phones for a little bit longer, for example, could be something that that really does affect them. Really, they need to outperform last quarter. Right now, the estimate is for like 1 penny per share above what they put out last year at this time. So year over year numbers might end up coming out flat. Not necessarily great for a growth story. They are also known to slightly beat on their earnings as well, though. So a beat would be certainly favorable, and we want a guidance for the next quarter, which puts us up above a low point of last year. So we could be set to outperform. We're going to have to see for Apple which way this goes. They don't get to be a $2.6 trillion market cap company by accident. They're a very strong company, very good company. I do think that that we could go either way on this one. I think this is a real coin flip for us. I think about 5% in either direction is what we can expect from Apple from their earnings. So guys, I'm going to let you go. If you want to see my buys and sells, you want to hear more of my commentary, check out the link down in the description for the Patreon. Also down in the description, you'll find a link for a technical analysis trading course where you can take your trading game to the next level. I'm going to let you guys go. Thank you very much for your time. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.